Hey everyone, this is Josh here at Invest with Met, and I wanted to just go over a few things now that we've had a chance to digest the Robinhood earnings that were released yesterday evening. Awesome quarter by Robinhood and their team. Just a couple of things that I wanted to go over today, though, mostly price targets. There's a lot of upgrades this morning. We'll take a look at the Vanna exposure chart to see what dealer positioning is looking like right now um, for the stock and where it might be headed. The other thing I would like to look at is Q1 expectations. So this morning on X, I rolled out my way too early expectations for Q1. I think it'll be another good quarter, at least from what I'm seeing so far, and I'll kind of go through how I'm getting the numbers, what I'm seeing, um, and where that's headed. So let's go ahead and start. First, let's take a look at price targets. I think this was pretty funny, honestly, this morning. I had already shared my price target a while ago. I think this is going to 100 bucks by this time next year. I think there's probably a few other folks feeling that way now. Maybe not before earnings, but this was a train coming down the track that I think you could have seen a while back. Yeah, you never know how the market's going to react though to earnings. However, I don't think Hood really gave them a chance um, to be bearish after this earnings report. So let's look first at the price target chart I had this morning that I also put on my X. You can see here, this is just as of today. A few of these have changed even since I put this out, but we'll just go through quickly what the changes were here. Bernstein was the biggest raise here. They're up to 105 from 51, so they doubled their price target. This is more in line with what I am expecting. I'm thinking 90 to 100, so 105 is good to see. Mizuho raised from 80, raised to 80, 65. So they were pretty bullish earlier, not quite as bullish Mizuho, but or sorry, as Bernstein, but they're getting up there. I'll just go through the other ones real quick here. Piper Sandler, 75 from 64. KeyBank, 75 from 57. Barclays, 76 from 54. JMP, 77 from 60. Needham, 70 from 52. Cities, 60 from 45. And then KBW, they're on drugs. I took them out of here because it's so dumb. They're at 38, which is honestly laughable at this point. JP Morgan hasn't done an upgrade. Actually, they may have since I put this list together. Maybe it was 60 is what I heard, but previously they were at 43. So it's either 43 or 60 for them. The average now is up over $70 a share for price targets going forward to 2026, which is pretty bullish. We're actually still trading below that right now, even after the earnings. I mean, we had a pretty big move up, so that is to be expected. We were up 5 or 6% going into the report yesterday, and then we went above and beyond, up another 15% at one point. I think we're 22% up in the after hours yesterday. Last time I looked, it was trading around 62 bucks, which was 10% for the day. So if you think from yesterday's open, it's up 16%. So it's hard to argue that it should be up any more than that. I mean, it was really good earnings, and people have already talked about this ad nauseum. So I'm not going to go back over the earnings. I really want to focus more on um, where this is going, not where it's been. So let's take a look. Next, I want to share the Vanna chart. So this is just dealer exposure. This is where people were positioned. People probably noticed this morning that we raised, or we didn't raise. Well, we did raise the strikes for options expiring out on the leaps all the way up to 90. Previously, the high was 75, and I'll show you here where the price flows are for Vanna if my screen will ever let me share. And we'll switch over to this one. All right, here we go. So taking a look at the Vanna dealer exposure, you see where we're priced right now. The way to look at this is anything red negative exposure is acting as like repulsive support. If it's below the price target, if it's above, then it's pushing it back the other way. So with this below the price, this is really a support level. So from 59 to 61, if this thing were to fall for some reason under 59, I think probably looking to buy or open positions because it's going to get sucked back up over this price level. And then you're looking out, what you really want to see, which is what we see here, is positive Havana out in front. Um, so this is more or less where people were positioned, where they think this is going to go. As of yesterday, you can really see there was a ton of accumulation out here at the 75 strike. And probably why we failed at 65 today is because there was a lot of people positioned at 65. So the price kind of got pushed back under that to get those people out of the money. But this is for the March strike. And if you go out and you look at the all expiration strike, you'll see a very similar chart going out into like next year, where a lot of the volume for options is at the 75 strike. And this was pre the 90 strike being open. So this will look different tomorrow. You may even see some positive VANF where people were positioned out, in the 80s. I don't know if we'll see a huge positioning in the 90s. That'd be kind of crazy, even with the earnings. But this is really bullish. I mean, you have support down here and you have upside here. It looks like the majority of dealers are positioned for this thing to go higher. And the fact that this 75 is so large after earnings, it's a pretty good look for where this might be headed. And then the last thing I really wanted to talk about is where this is headed. And I shared this on X this morning also. And hopefully it'll show up right because it's a video player, but there we go. I have it paused. So this is my way too early. It says Q2, but it should be Q1 2025 earnings. More or less, it looks very similar to Q4, which is pretty bullish because prior to the Q4 earnings release, people were expecting this to really pull back. Like they were thinking this would be a one-off quarter where Hood would have a really good Q4 because crypto volumes were up so much. But that trend has continued. One of the other things I keep track of is the notional price times volume for cryptos that are trading on Robinhood. So I pull all of the prices and volumes for the month and the previous month so I can compare back to data we already know. For notional volumes, I know Hood said yesterday that January was around 20 billion in notional volumes for cryptocurrency, which is really good. I mean, it wasn't as good as December and November where we were seeing over 30 billion, but the take rates have gone up significantly since then. I think the average for Q4 was 0.49 percent, which is the amount they make off of each trade. That's over 0.6% now. So it's okay that the volumes are coming down, but they're taking more revenue from those volumes. And it's kind of offset. So looking at my calculation that I do based on area under the curve, which is just the percentage of, the chart um, that's graphed based on the volume times price over time. Looking at February, it's exactly the same more or less as January, and we know January was 20 billion. So as of February 12th, it is on track for another 20 billion in notional volumes. And if you multiply that by the 0.6% take rate, you get around 130, 120, 130 million for crypto revenue. And I really all I did here was I times that by 3. I put it a little higher because I don't know if the take rates will stay here. I think they'll continue to go up throughout the quarter. So if they go up, that amount will also go up with it. But I have 375 million for crypto options, equity, and other. These are all based off of the growth rate we've seen in previous quarters. So I took the numbers from this past quarter and just applied the standard growth rate that we saw in these areas in Q4, Q3, Q2 of last year. And then futures, I kind of had to guess at this depending on the market share that they take over for futures in Q1. They're still rolling it out. So I didn't get too crazy with what they would make on futures. I put 5 million in here just kind of as a placeholder. Event contracts, I put 1 million because we don't even know if they're going to roll these out. We think they will. I mean, they just tried to do the Super Bowl, but we do have March Madness coming up in Q1. So if they can get approval from the FDCD, whatever the hell the organization is that told them they couldn't do Super Bowl contracts, um, then maybe they can roll out this for March Madness. I think that would be a pretty big draw for event contracts if they could do it. And 1 million is pretty reasonable. They made 5 million on the presidential contracts, and that was a really big, like, there was half a billion, um, half a billion contracts traded. So 5 million on that was pretty good. So one is, I don't know, a conservative effort. I'm really just guessing in that. Net interest and other here, these are also based on previous quarters and the growth rate. So I took the numbers here from Q4 and applied the growth rate. So as you see, revenue is 1.1 billion, which would be slightly higher um, than what we had seen in Q4. And I don't think people were expecting that. I still don't think they're expecting that. I think a lot of, you know, retail and institutional, they're celebrating this quarter, but I don't think they expect next quarter to exceed this quarter. I don't think that's priced in yet. Is kind of what I'm getting at. Um, I'm just reading your comments here. Yeah, futures. I don't know when they'll roll that out to everyone. I actually requested this back in November, and I'm surprised they gave it to me. But I had messaged Robinhood support in the app when they first rolled out the index futures. And I was like, hey, is there any way when futures roll out, if you can put me at the top of your list? And they're like, yeah, sure, we'll flag your account. And lo and behold, I was like one of the first people to get futures trading. And like I kind of told them I had experience with this in the past. It wasn't like I didn't know what futures were, and I don't know if that helped. Um, but they gave it to me. I tried it out. I've traded a few contracts. It's super smooth and intuitive, which kind of goes with what Robinhood is known for. It's very similar to how they did options. They make it so easy to use. I think you'll really like it when you get it. I mean, I would just be careful. Like I do the mini contracts just for fun. They're great for a hedge. So when I was using them, like Robinhood is pretty correlated to BTC. So kind of what you could do, and I don't have any positions open now, but you could short Bitcoin as a hedge to being long Robinhood. And it gives you a lot of exposure without having to put a whole lot of money in. I think the Bitcoin minis, you just need like 3K to open one, but it's like a 5x multiplier. So if you open one and Bitcoin drops, you know, 10 grand, I think you make whatever 5x the mini is like a quarter. You make like 2K on that, which would really help offset if you're long Robinhood, it's going to probably drop with Bitcoin. So it'll take some of the pain away. That's the main thing I use futures for is just to hedge my long equity positions. But yeah, it's something definitely to be excited about, and I hope they roll it out for everyone. As I think, you know, if retail gets a hold of it and gets used to trading it, um, they think it's a nine-figure. Yeah, I put 5 million in here just because not many people have it, but they think this could be something like crypto and options, where you're seeing over $100 million a quarter in revenue generated from futures trading. And futures has a way higher take rate. It's like 10x. When you place an equity order, you just spend, think 6 cents to get the order in. It's closer to 60 cents. I think it's 50 cents for gold members. So you're looking at 10x. They make 10x the amount of money when somebody trades a futures contract that they do when somebody trades an equity contract. So if that does gain some kind of serious adoption, like options did when they first rolled it out, Robinhood could make a ton of money. That's not even. It's really not even factored into their future revenues right now. You know, it's already a great stock, and I think it's already on a great trajectory, even without futures. It's just, that and event contracts is what could send this like way, way higher if the adoption is there when they roll it out. Let's see. Since Hood's crypto revenue is big now, Hood would trade with Bitcoin. Yes. Yes. But that's always kind of been true. And that's why I was talking about Hood and Bitcoin kind of paired together. Although, if we have an alt season, yeah, I don't do crypto, but if altcoins run, Bitcoin could do nothing and Robinhood can make a lot of money because they are starting to add more alts too, um, to their platform, which they really couldn't do before because the regulatory scrutiny was so high. They even, at one point were pulling alts off of their platform because they were so scared the SEC was going to hammer them. And they ultimately did get fined, which was like $45 million, whatever. They made $1 billion last quarter. I think they can foot the bill for that, which is probably why they're shy about the FTCT. Also, that commodities commission that told them, not to do the event contracts. They're probably shy about doing that because they don't want to get hit with another fine. So they're like, wait, we'll just stop it. We'll revisit it. We'll talk to you about what you want to see for us to roll these out without getting in trouble for it because they just don't need it. Like they're making a ton of money. Why risk, over a few $1,000,000 opening yourself to some kind of SEC investigation where the headline alone will freak people out to sell when they really don't need to be? But yeah, getting back into this, 1.1 billion is what I'm looking at. I bumped up OpEx a little bit, but they talked about this on the call yesterday too. They don't have a lot of overhead for operating expenses. Like 90% of their operating expenses are fixed. The only thing that really increases is advertisement. And I think that's pretty cheap. Like, I mean, they're running 10-second ads on YouTube. I can't imagine that's, costing them a ton of money. And then cost of revenue, I bumped that up a little bit too. But overall, the net income, I think it was 492 if you took out that credit that they got this quarter. It's around the same net income coming in Q1. That's even with crypto volumes dying off a bit because they're increasing their take rate to offset the volume being lower. So I think it'll be another good quarter. EPS, I put point 0.5. That's what this would come out to based on the number of shares that they have, the total number. But things that I don't have factored in is they do buybacks. So like last quarter, they bought back, 5 million shares, which isn't a lot, but it's something. And depending on operating expenses, this number could come in higher. But it'll probably be EPS will be in the point 0.5 range, which I think it was 0.54 this quarter if you took out the one-time credit. So looking forward, if they can do point 0.5 every quarter ish, that would be an EPS of 2 for the year. And since the price, if trading at $62, you would just divide that by 2 to get a price to earnings ratio, which would put their P at 31. For a company that's growing, accounts and market share, assets under custody, gold memberships are increasing. Like everything's going up at a pretty incredible rate right now for Robinhood. I don't know if that's sustainable, but I do think it'll keep going. A 31 PE is really low for a growth company. I mean, Robinhood is more a tech stock than it is a finance stock at this point. So I think it should trade with a higher multiple of 40 plus. And if you do that, you get closer to 70, 80, $90 per share seems like a more reasonable target than 60 at a higher multiple, which right now their multiple, it shows as 35 on the Robinhood app, but that's not really what it is because you got to take out that one-time credit. That's not something they're going to get every quarter. It was like $400 million. But if you take that out, their multiple right now today is 56 is what their PE is, which is high, but with their growth rate, I think it's justifiable. If the growth rate stops, then you have to reassess. But right now, with the growth where it is, I think it's trading at below a fair value. It's trading below where most people have their price targets now. And then that's going forward. I'll keep updating this as the quarter moves on. I'll keep watching crypto to make sure it doesn't like completely fall off the shelf. And I'll keep watching take rates to see if those go up. And that number will be the main number that'll move. I think options, equity, and some of these other net interests will be more reliable. And Robinhood gives us those numbers each month. So after February, we'll have a better idea in March what Q1 is going to be. And I'll probably just do an overhaul of this table then. All right. Last thing, I just want to share my position. And yes, I am still in it, even as the dummy that I am. So this is what I'm holding right now. I've had these for a while. I had these, I think it was like trading around $47 in January when I bought these. I've traded in and out with this. I finally was just like, you know what, screw it. I'm gonna put everything in that I had available at the time. I bought 147 of these in January. I added 3 more actually the day before earnings when we had that little dip, um, because that's all I had left in my account to add. I would have added more if I'd had more to add. But I think this is going a lot higher. I mean, my break even's 77. Analyst price targets right now are in the low 70s. I think the market will give a premium. Today is just kind of a digestion. It's settling down. Um, after a really big move, I think a chop like this to a small pullback is totally normal. I mean, it's one day. Nothing has changed. The earnings are what they are. They didn't guide, but they gave us the January numbers and they gave us color on the call where they're like, "Hey, you know, we're off to a strong start in Q1." That's as much as they can say without giving it away. I think if they were nervous, they wouldn't have done an in-person earnings call like they did. I think they're very confident about where things are headed, which just gives me even more confidence, you know, to stay in this position. Like I have until next year. I have 11 months. So I'm not in a hurry to get out of this. Yeah, it bled back like $40,000 this morning from where it opened. Woo. I mean, it sucks, but if I think this is going higher, like if I think this is going to 100, then this number is going to be like 3x what it is right now. So I really don't have a reason to sell unless something changes with the numbers and the data, unless crypto really dies off, unless they get hit with some huge SEC investigation, or unless Russia drops a nuke in Ukraine. I have no reason to exit this position. The broader market looks pretty strong. I think this year will be a strong year. January is green. Like 90% of the time, if January is green, then the rest of the year you end higher than you were. So I think the market stays up, which is good for Robinhood. Robinhood needs the market to do well because, I mean, they're a trading platform. People don't trade if they're broke. So we'll see. I think a lot of the Trump policies, whether you like them or not, I think they'll help with the deficit, which long term will help with inflation. I mean, you're not going to see it right away, but I think oil's in for some pain this year. That's going to help inflation headline numbers. I think housing is going to start to roll over this year. That's a huge player in CPI. All of that kind of stuff, and then the possibility of if they even start to whisper about rate cuts again, the market's just going to launch later in this year, and that will just be good for Robinhood. And you have support for crypto now that you didn't used to have. The government is essentially backing it. You have banks. I mean, Deutsche Bank backed some random ass crypto this morning. Um, so I don't think crypto is going anywhere. Like it may stabilize, but if there's an alt season, Robinhood's going to make a killing, especially if the market runs with it. I just think it's only up from here, especially if you're in shares. If you're in shares, you can just sit on it, be patient. There's no reason to run. We might have 5% pullbacks here and there. It's still up a bajillion percent from last year. Why panic? Don't panic sell. Just give it time. Let it see where it goes. Let's see. What do you think the mid and high PE for Robinhood should be? I mean, they just had a quarter where they grew 100%. Do I think they continue to grow at 100%? No. But I mean, typically you're looking at look at Palantir. I mean, their PE is like 600 or whatever. I I mean, who knows what the high end could be. I think low end 40 40 at minimum it should be where they're at. 40 is like your stereotypical tech company PE for a growth tech company who's growing at 20 to 30%. You know, 40. That's the baseline. And we're below that right now if you factor in the credit that they just got. You take that out, we're at 56. I think 56 is not crazy. That's pretty reasonable, but I think it could be higher. And if you're looking at forward PE, like I was talking about a minute ago, if they continue to do what they've done these previous quarters and generate a EPS around 0.5, then at their current price for annualized EPS, their PE would be 31. And I think that's too low. So I think it should be 20% higher. And if it's 20% higher, the stock should be 20% higher. And if we're at 60, what's 20% of 60? 15. $75. My base case, I think in the video I released before earnings was 67.50 is what I think the absolute minimum should be at the end of this year for Robinhood. And I think the upside for Robinhood at the end of this year is 100. I think we're going to end up between 67.50 and 100 when January 2026 rolls around. Um, and there'll probably be some volatility in between where it goes up, comes back, goes up, comes back. I think that's the range that I'm looking for. And at $100 with an EPS of 2 for the year, that would be a P of 50, which I think is fair if they're still growing at, I think they want to continue to grow as the rule of 40, like 40%. Um, but yeah, I think, I think Matt, I think 75 is reasonable. I mean, looking at the Vanna chart, I think people are positioned for 75 in March. I don't know if it'll get there in March, but April, just looking at the options and where people were positioned, it looks like mid 70s. And yeah, $100 a year from now is kind of how I feel about that. How long have I been investing, AJ? Since 2011. Started, dude. I've been through the whole, like, I started with weed stocks back in like 2014, whenever they had their first run, and I lost a ton of money um, doing stupid shit. And after that, I kind of just did your regular DCA 401k probably from 2015 to 2020. And then I got back in it when everyone else did during COVID. Um, I still have a full time job. Technically, I'm working right now, which I have a call with a client at 2:30, so I have to drop for that. But yeah, I've been investing for, what is that, 14 years since I got my first job. But like in a brokerage account, yeah, my first investing was like 2011, and I did the same stuff everyone does. Like I started with speculation into like pharma stocks. Like I was, buying stuff on, yeah. I started on Scott Trade. That's how long ago it was. And I was paying 750 commission to do trades on Scott Trade. That's how ancient I am. But yeah, I lost money in stupid pharma stocks, and then I switched to weed stocks. I lost money in weed stocks. It took me like a decade to learn not to be an idiot, and then just start investing in good companies. And COVID helped, and just like all of the finfluencers, there's some really good ones out there. Like I'm sure you're aware of like Amit, Tanner, and those guys that I've been on the shows with. Like just people who are fundamentally sound and finding good companies like Robinhood. It's not, it's hard to do, but other people are putting in the time. If you know who to watch and listen to, um, they can kind of do the work for you and getting into some of these early. But yeah, I've been trading for a long time. Options since 2019. Prior to that, it was just equity trading because I didn't really do options until I got onto the Robinhood platform, actually. Then I went back to Thinkorswim. I did options and futures for a while. Futures I did for about a year. I It's kind of hard because you're having to day trade. It's hard to do futures and have a full time job, which is why I like, longer dated options. I can kind of just buy them and then watch and monitor them. There's less work involved. I did the Theta Gang thing for like a couple of years where I was just selling options. That works really well, but it's not a like capital usage. Like you have to use a lot of capital, and the return just is not. I mean, it's good, but imagine selling covered calls on Robinhood at $55 a few days ago. Like, congrats, you made $2,000 when you could have made $50,000. So I've moved away from that type of strategy. So anything you can think of, like if you have questions, I've probably tried that version of trading. The only thing I haven't done is forex. Like I've never tried to trade currencies. I've just stayed away from that. Like I even did nat gas a couple of times, which was stupid. Yeah, yeah, definitely don't do covered calls. And yeah, hey Matt, also you got to think about in March is the S&P inclusion for Q1. They'll do the rebalancing. I didn't even have that in my uh, roadmap that I put out, but there's a rebalancing each quarter for the S&P 500. Um, a lot of people seem to think Robinhood's gonna get in, but I don't know. Like Coinbase has been on that list for a long time, and Coinbase has a bigger market cap, and they still haven't gotten in. I think AppLovin was on there last quarter, and they have a massive market cap. You probably noticed them because they went up like $100 in after hours yesterday. Um, they are still not in the S&P 500 either. So they usually don't let in more than 3 companies at a time. I think Robinhood does have a really good chance though to get in March. They have over a 50 billion market cap now, which is a big selling point. Like they already checked all the boxes before this quarter, but I think they have a 50% greater chance now of getting in. Yeah, in March, I'd say about 50%. Yeah, 50-50. But if they do get in, you could see like the Palantir effect where institutions run to buy to put into their portfolios, like the SPY and all of those ETFs will have to buy to put a percentage into their portfolios. And all of that buying pressure, like if retail comes in on top of that just to join in on that squeeze. Um, I mean, if that happened in March, you really could see like 80 plus to 100 in April just from that effect of all of the ETFs and institutions having to buy because of inclusion in the S&P 500. Like that's a real possibility. So that's something to look out for. I'm definitely holding these options until April because it's one of the things I want to see. Like if they get in to the S&P 500, like they're going to be worth way more than they are right now. They'll just have to be because ETFs have to buy to put them in there. So that'll be cool. Is there any alt season? I don't know. Yeah, it would really boost revenue because they charge more for altcoins than they do for Bitcoin and like Ethereum and Solana. I think the take rates for those three are around zero point 0.6. The altcoins are like 0.65. When Trump coin rolled out that first day, Robinhood was taking 1.6% of every trade that was being made on Trump coin. So they probably made a ton of money on that. And they rolled that thing out like 2 days after it was on Moonshot. So they're capable. Like they've shown like if there's a really popular meme coin that just pops up where there's a ton of volume, they've shown that they can integrate it into the platform in less than a week and they'll just charge a bunch of money because people will be so, ravenous to get into it. They'll spend 1.5% on their trade just to get some of it. And I think that's gonna be, I don't know if it'll happen again. It seems like right now everything in the alt realm is kind of dead. I'm sure there's some stuff that's popping here and there every day, but we're not seeing one of those everything rallies where everything just takes off for alts. Is Hood the only stock I own? No. If you look at my X, I have an IRA account that I've started to just DCA into for fun. And then I have a 401k, which is just in like VTI. All in the brokerage account, Hood is the only thing I have right now, which seems really stupid, but I mean that's kind of what the account is for, is to try and make, outsized gains. Like I'm not trying to do that in my 401k. It's just in my brokerage account. But other stuff that I'm in is like individual stocks. Meta, I've been in since before last earnings. TSSI, that's just like an AI infrastructure play for a small cap. Trying to think here. Let me see what else I can open it up and tell you what I'm in. Just look at the app. Duh. I was only in 10 stocks. I was in Rocket Lab. I was in ASTS too at one point, but I was up so much on those that I actually closed those positions. I was up and there was just shares. I was up over 50%, so I closed those and reallocated. Some of that money I put into Hood, some of that money I put into Meta, and some of it I put into TSSI. But right now, the only thing other than Hood individual stock wise I own is Nvidia. I bought some in that dumb pullback on the DeepSeek news. And I got like, what's my call spaces on Nvidia? Yeah, like 120 bucks. I have Costco sub 1,000. I have Meta, which I got before their last earnings. I have ISRG. That is a medical device company, but it's also kind of like an AI play. They do like um, the robotics for like heart procedures, where like some surgeon in a room just controls a robot and does the heart procedure. But they're a pretty big company. They've been around a while. And then IBIT. I have I have my Bitcoin exposure through IBIT. So those are my individual holdings that I have. All right, folks, I got 15 minutes to get ready for my client call. But thanks for all those that joined, all like 5 of you. I really appreciate it. I hope y'all have a great day. Happy trading. And I'll talk to you soon. See ya.